Hey everyone, I'm Dragon King. Today I want to share with you a concept that many traders look at, but very few explain clearly: the vacuum zone. A lot of people think a vacuum zone means massive impulsive moves or strong imbalance areas. Actually, that's not what we're talking about today. The vacuum zone we're discussing is the middle area between two swing points where wicks heavily overlap and converge. This zone doesn't usually have extremely strong momentum, but it often becomes a key area where price reacts or consolidates. In this video, I'll clearly explain what exactly is a vacuum zone, why it forms, how to draw it, and how to trade it once you've identified it. But before we start, if you want to become a top-tier trader, feel free to scan my QR code and join the group for free learning. Let's first clarify what we mean by vacuum zone. It refers to the price region between two clear swing highs or swing lows where the wicks intersect and cluster. Swing points are obvious turning points, major highs or lows. Normally, when price moves from a low to a high, the wicks of the candles will test levels multiple times. This causes many traders' entry and exit orders to accumulate around those wick levels, creating dense order flow areas. So how does this wick convergence vacuum zone actually form? It mainly happens during strong directional moves when both buyers and sellers are probing, but neither side has achieved a decisive victory. The candles don't consolidate or oscillate properly at those prices. As a result, you get an area with dense wick overlaps but relatively sparse body transactions. This is the vacuum zone. Next, let me teach you how to draw it. The method is very simple. First, identify two clear swing points, a significant swing high and swing low. Then look at all the candles between these 2 points, paying special attention to the upper and lower wicks. Find the area where these wicks heavily overlap and cluster. Draw a rectangle around this densest wick convergence zone, not the entire impulse leg. Once drawn, the rectangular box represents your vacuum zone. Now, the most important part: how to trade the vacuum zone. When price returns to test or rebalances back into this zone, we observe how price reacts upon contact. There are several possible scenarios. A strong candle breaks straight through it, price consolidates inside the box, or it hesitates and then reverses. We generally use the vacuum zone primarily for reversal setups. Let me show you a few real examples on the ETH 4-hour chart. Here, after price rallied, a vacuum zone formed in this area. We draw the box. Price continued higher, got rejected, then broke down through the zone. When it pulled back up to retest the vacuum zone, it failed to close above it. This gave us a clean short entry. Stop loss can be placed above the recent high. Take profit at the previous low. No need to be too greedy. After that, price built a bullish structure at the lows, rallied again, and formed another new vacuum zone higher up. We draw it. Price tried to break higher but failed, then smashed down through the zone. Again, we saw rejection at the upper boundary, another short opportunity. If you missed the first one, don't worry. The previous vacuum zone gave us another retest entry later. As long as you use vacuum zones properly, you'll find there are plenty of high probability opportunities. Summary: the vacuum zone is the middle area between two swing points where wicks heavily converge. It acts as a form of dynamic support and resistance, not a single level, but a zone. What matters most is not how perfectly you draw the box, but how price actually behaves when it returns to this wick overlap area. Mastering vacuum zones can become a powerful weapon in your trading arsenal. If you want to learn more professional trading strategies, remember to scan my QR code and join the group for free. If this video helped you, please like, share, subscribe, and turn on notifications. See you in the next video.